It's a positive start for the Asia Pacific screen as well.
That the group of ministers on rate rationalization should consider the proposal to cut GST on fertilizers and several inputs of fertilizers.
Since the 23,500 put is seeing a fair bit of writing, this is your crucial support zone.
The organized players actually grew at 18 to 19%.
Good going, 30 points higher on the Nifty, 100 points higher on the sensex.
Midcaps are the areas where the action was likely to be.
Today, some profit booking has set in. This is after 4 continuous days of gains that we've seen.
The mother of all deal was indeed the Indus Tower block, where the Vodafone PLC has now confirmed that they've sold 18% stake via block deal.
To say the Ministry of Heavy Industries has formed a task force to work towards a National Capital Goods Policy 2025.
They're exempting compensation cess on aerated drinks and energy drinks sold under the unit-run canteen.
There's been some recovery. That too has been sold into. So it's quite a mixed picture. Continues to be very volatile.
Sharpest strategies, top market trends, unmatched perspectives. The trading day's most comprehensive roundup. Stay ahead with NSE Closing Bell. Broadcasting live from the CNBC-TV18 Motilal Oswal Studios in Mumbai.
Hello and welcome to Closing Bell. You've just seen the day that went by. It's been quite a dramatic one, especially when it comes to banks. We are coming to you live from the CNBC-TV18 Motilal Oswal Studios. I'm Surabhi, and with me, Sonia as well as Nigel. Guys, what a day. The bank Nifty is making all the headlines today.
Well, that's right. You know, what comes to mind is the call that Gautam Shah made yesterday on Bazaar, right?
Yeah.
He said that we're at 50,000 and he wouldn't be surprised if we moved to 60,000 in a jiffy. And as of now, in fact, we've done nearly around 2,000 points of that.
I remember him saying that banks will be the trade for the next 2-3 months. And well, I guess it's with the FBI's coming in, I think it's finally showing up.
Oh, absolutely. And today has pretty much been a tug of war between the bulls and the bears, right? If you look at just the sort of the Nifty screen grab, you'll see that it was up, it was down, it was all over the place. But now, by the end of the day, we're sort of well above that 23,580 mark and led largely by the banks. So big day coming through. And HDFC Bank really is the stock I want to talk about. In the last 24 to 48 hours, a lot of experts are banking on HDFC Bank, you know, starting to perform now. And lo and behold, that's what's happened today.
Absolutely. So let's just quickly run through the screen. What we've got going is a fairly skewed market. You have the Nifty, which is absolutely flat. You have the Midcap index, which has been underperforming all through the day. And then you have the banking part of the market, which is a story in its own self. So extremely skewed, very diverse and, varied trends that are coming in. So on the large cap screen, let's pull up all the stocks. Of course, Sonia mentioned HDFC Bank, but it's not alone. It's got company, Axis, ICICI, IndusInd, Kotak, SBI. They're all the top Nifty, 5 Nifty top names, top movers are actually bank stocks. So it's telling you that this is big bulk buying that's happening. As we see. And then the other stocks that are working are Infosys, HCL and Tech Mahindra. There's some green on Wipro as well. So you have the large technology stocks and the large banks. Aside of that, actually, even the large cap screen is really fizzling out. I mean, there's a lot of weakness. There's selling on stocks like L&T. There's selling on auto names, profit taking on auto names. A lot of the consumer stocks are down. So I would have to say that, we need to take this with a pinch of salt. The bank trade is finally working. That's great news for the bulls. But the rest of the market is not in the pink of health, should we say.
Well, that's right. Well, let's get in a trade then on the index. And today, what could be the additional fillip will be that the Nifty Bank will be playing out its weekly expiry. So let's see how the final hour of trade goes. So Mitesh Thakur joins us to fill us in with a quick analysis. Hi, Mitesh. It's that sort of a day. You buy the banking names and you ride on them because the private banking names have come back with full force.
Hi, Nigel. Good afternoon. I think both me and Sudarshan also highlighted this in the morning show that it will be the financial names which could lead the rally for the next few days. But, what is more surprising is the strength shown and the outperformance shown by the private banking names. I think that's where some kind of catch-up is happening. We had earlier buyers in Kotak and IndusInd Bank. I think both these stocks continue to do well, look well, and I think the heavyweight, which is HDFC and ICICI Bank, also look good. So broadly, the index or the Nifty will be supported by the Bank Nifty, and now that the Bank Nifty has managed to get past the 51,100 mark, which was my first target for the day, I think we are looking at a test of 52,000, which is where some open interest on the call side is there, and then 52,500. So I think both the round numbers could be tested as well. So stay long and focus more on the financial names.
Okay, focus more on individual earnings. Wanted your thoughts on HDFC Bank particularly, and any other stocks that you like, Mitesh?
Yeah. Good afternoon, Sonia. HDFC Bank also has done a very good thing. It's filled a big gap, which was created in the on the day of first quarter results. I think the first target of 1660 is met, but we are looking at the 1700 level, which is where the stock had peaked out in December of 23. That top should be revisited and most likely, crossed. Once we hit 1700 and start getting past that, then we are talking about a fresh all-time high, at least on closing basis, though the intraday high is slightly higher, and therefore we should then keep a target of 1745. So quite positive on HDFC Bank also. On the stocks that I like, I have a buy call on Aarti Industries. It's tapered off today a little bit, but the overall setup is suggesting that the correction is over and the stock could get into an uptrend. So buy here with the stop at 678 and look for targets of 710 to about 715 on the upside. And then I also like, I do like banks, but I've not given a call yet. Axis Bank is one, which can be bought afresh. Keep a stop at 1217, look for targets of 1265.
Okay, that's on the big bank trade. By the way, in a bit we'll get Abhishek in as well, because he's been crunching some numbers to find the linkage between the enthusiasm that we're seeing in bank stocks today and the fact that we've got this massive bulge bracket block trade that happened, series of block trades actually, that happened in Indus Towers, where Vodafone has sold off a big chunk of their stake. 20% stake sold. I think they own now only about 3% residual stake left, and they've raised a huge amount of money. And the hope is that some of this money, or maybe most of this money, will make its way to lenders, and the dues will start getting cleared up. And I guess that's also adding to the positive sentiment. Mitesh, since I just brought up these stocks, Vodafone Idea has also had a great run, right? It's not been a stock for the faint-hearted, but for the traders who could actually get in, it's worked well. Any advice now on either Indus Tower or on Vodafone Idea?
Yeah, I think, the stock of Vodafone Idea, I think, did a good rally a few months back and then went through a correction from levels of 17.5 back to about 12.5, 13, which is where it met the 200 average and started moving up again. The overall pattern is quite positive. Now, what one should wait for is the stock to be able to break above the previous swing highs, which were made in February. February, we got a weekly closing high of 17.5 and the intra-week high was around 18.5. So around these levels, you might see some profit booking happening, but my sense is that the pattern suggests that we should be able to get past these levels and then head towards 20.
Okay, well, we will come back to you for more, but look at the banking stocks. ICICI Bank is now up 3.5%. By the way, we're talking about HDFC Bank today, but if you look at the 1 month chart, right, in the month of June so far, HDFC Bank is almost up 15%. So it's kind of started its outperformance at the beginning of June itself. It's been a good month for these private sector banks. But Indus Towers has slumped after Vodafone has sold 18% stake in the company. Nimesh is here to give us the details. Nimesh, over to you.
So, from a stock perspective, the stock actually recovered from the day's low after the block got executed. But in terms of details, there is a confirmation now from Vodafone PLC that they have actually indeed sold 18% stake in Indus Tower block deal today. In terms of buyers, we have a confirmation now that Bharti Airtel has indeed bought 1% stake in the block deal. In terms of remaining buyers, I guess there are multiple domestic mutual funds. One of the leading mutual fund was an anchor investor there. Within FIS, some hedge funds have bought as well. So that's the mix of buyers. Some bit of disclosures might come post-market status, so that's something to track. In terms of size, Vodafone PLC has now raised close to 1.7 billion by selling this 18% stake, and they are going to retain the remaining 3% stake. Now, the announcement from Vodafone PLC very clearly says that the large part of the money will be used to pay off the lenders. Now, just to give a background to this, Sonia, Vodafone PLC had put in close to $1.5 billion in the Vodafone Idea rights issue way back in 2019. And to fund that, they had pledged the entire Indus stake to lenders. So now that this stake has got sold, the money will go back to the lenders. So I guess Abhishek could explain more on who all benefits. But that's the news part, that Vodafone PLC has indeed sold 18%. Bharti bought 1%, and the rest is bought by domestic mutual funds and FIs. And Vodafone PLC will continue to hold 3% stake after today's block deal.
Okay, all right, got it. Nimesh, thanks very much. It's been a day of marquee block deals, and this, of course, was the biggest of the lot. We have Prakash Diwan also joining in. Prakash, great to have you on the show as always. So what do you think? I mean, Vodafone Idea, from the days when it looked like it's absolute lights out to now getting more investors on board. Obviously, the government is already there, and hopes of maybe even tariff increases as we head into the second half of the year. What's your take? You're on mute.
Yeah, sorry. So I think good afternoon. So I said Vodafone is undergoing, different acts of the story that probably got scripted when the promoter group decided to put in more money after almost saying no for years together, right? So that was the turning point. And if you see the series of events after that, whether it's capital raise or whether it's capital reset, all of that is actually to make sure that it doesn't just play a respectable third player kind of a role, but it actually competes in the market. And that's precisely what's happening or likely to happen going forward. The culmination of this is going to be the tariff hike announcement. So, and I'm expecting that could probably happen as soon as first half of July, given the fact that everybody is gearing to it. And what Vodafone is doing is the virtuous cycle of money coming back, making sure that it goes to the lenders, goes to the lot of vendors who have been waiting. That makes the telecom space as a whole very interesting and healthy to invest into. And I wouldn't be surprised if the next couple of years, as a sector, it actually outperforms. Of course, there are very few listed players in that. But within what we have as ancillaries and as primary players, I think Vodafone is actually triggered off a very positive cycle where things will look up. So quite positive. As a matter of disclosure, I do have this name on my portfolio. But you'll have to be patient with real change to happen. This is more of catch-up. And beyond 18.5 rupees, I think it will need some organic growth to kind of start inching upwards. But it possibly has a better chance than ever before to do that.
Prakash, I'm really tempted to ask you, what was your buy price on Vodafone Idea? If at all you can share.
So interestingly, there are two parts to it. Some which were greed-driven and we got at slightly higher levels, but some were more part of the FPO, which was a absolute stellar call in that sense, because you knew that the stock was available at a decent price, far lower than that 14.5 odds which the Birla Group had invested into, and there was supply. So I think it's just everything's fallen together in place more than anything else, and things are happening much sooner than what most of us would have expected in terms of the revival.
Prakash, hi, afternoon. The star of the last 2 days is undoubtedly the bank nifty, right? I mean, just look at it now, almost at 52,000, who would have thought? And their names like HDFC Bank, Axis Bank is actually up almost 4% now. Do you think the momentum in the banks can continue? What is leading to it? And what's the best way to approach it now?
Good afternoon, Sonia. So, to understand whether this momentum continues, let's understand what you attribute this to. And my sense is, the continuity that's come through, in most of the decisions that have started trickling out of the cabinet and out of the government machinery, and this anticipation of the budget being fairly balanced in terms of being growth oriented and not just populist and all. I think it's very clearly telling you that banks will probably be leading this charge of capital creation. And this time around, for a change, I can tell you there is a huge anticipation, and fairly so, of private sector participation in the capital formation. Till last year we've seen more PSU-driven growth, but now you'll probably have the private sector chipping in. And when that happens, with the kind of growth that we are expecting, you'll start seeing healthy restoration of NIMs and the credit growth, which has been slightly pale. That is kind of giving very good ample reason for people to start looking at banks afresh, and they were underowned. So, as one of the biggest components of the market, the ownership levels are far lower, and that's something which is likely to correct. You see the way ICICI Bank and Axis Bank are going towards their highs. I mean, it's primarily driven by the fact that they're still underowned in the larger scheme of things. So that's why you don't see an SBI participating as much today, or a BOB, but it's more of the IndusInd and the Axis and the ICICI of the world.
Okay, all right. Prakash, request you to hold that thought, and let's get to an exclusive then on the upcoming GST Council meeting. Sources say that the Fitment Committee has called for proposal to cut GST on fertilizer to be thought by the standing committee. Timsy is here to fill us in with more details. Timsy?
Well, that's right. What we are given to understand from sources that when it comes to the fitment committee nominated by the GST Council, they are actually now talking about the industry demand to cut rates, or to be precise, exempt GST on fertilizers from current 5% to nil. Now, this proposal actually was wriggled around in the fitment committee, and what we are given to understand is that fitment committee has recommended that this recommendation to reduce the GST from 5% to 0 is actually going to lead to a lot of inversion of duties, blocking of working capital. Thus, it should be appropriate for the group of ministers on rate rationalization to consider this request. Meanwhile, they also said there is a strong case that has been made by the Standing Committee on Chemicals and Fertilizers to reduce this rate. And not just this is on the proposal of the GST Council, rather certain inputs of the fertilizers such as ammonia, etc. Over there also the rates range between 12%, in certain cases it is 5%, in certain cases it is 18%. So there are three sort of brackets that fitment committee has recommended group of ministers on rate rationalization on the fertilizer window itself, that this exemption or this reduction in rates should be looked at only holistically after GOM on rate rationalization takes a view.
Okay, so the fitment committee is saying that maybe there could be a case to lower rates. Now it's up to the GOM to take that call. Got it, Timsy? Before we let you go, some of the stocks are very excited in the market, casino, online gaming, some of these companies, because of possibility that there could be some rethink over retrospective GST applicability. Can you tell us what's the latest you're picking up on this?
Yes, as you rightly said, GST Council is likely to get a breather for the industry where sectors which paid GST at lower rate versus that applied by GST authorities, that are likely to get relief from the retrospective action. GST Council may consider a proposal to not to levy higher GST when lower rate was paid by the industry, and that was a general practice that the industry was carrying out and not just one particular company per se. So GST Council may consider Law Commission's proposal to offer companies relief from the retrospective action for lower tax payout. Council is likely to consider not raising retrospective demands where industry paid lower GST rate in absence of clarity or where the rate was not specifically mentioned in black and white. Also, the amendment to the GST law is likely to not to allow refund of GST or cess arising in cases where higher demands of GST were paid, and now with this amendment there could be a lower rate. So over there no refunds are going to get done, and the amended law is likely, what experts say, could benefit sectors like online gaming, insurance, when it comes to other sectors like foreign shipping lines, foreign airlines, insurance company, etc. So there are many sectors who are likely to get the benefit of this. Just to lay down the procedure, Council is going to introduce Section 11A in the GST laws, which is likely to address this issue. And this is similar to what was Section 11C in the pre-GST regime in the central excise laws. So just replicating that law to be exercised as and when sector-specific the Council or the government feels that they would need to bring in amendment so that retrospective cases can be settled. So it is going to ease a lot of litigation is what experts say.
Yeah, no, absolutely. Though I remember this because it's gone all the way to the Supreme Court. The government held that this is not retrospective. The government said that we have merely clarified. You're paying GST at a rate of 18%. The actual rate is 28%. We've clarified that. But of course, industry was up in arms because industry practice, as you're saying, was 18%. So, Timsy, thank you very much for that. I guess, let's see if this happens, then maybe some of those outstanding huge GST notices, they'll be put to rest.
Yeah, I want Prakash's view on this. Prakash, maybe the current GST rate, well, it continues at around this 28%. But what could potentially be the relief is the monkey gets off your back, in the sense these companies have market cap of around 4,000 crores and the notices were close to around 15 to 20,000 crores. They had made no provision. Delta has made no provision whatsoever. So actually the impact on the books will not be that much. But the problem was investors that sold at 180, 200 rupees odd, they were worried that there is a huge tax implication that is, hovering around them.
Yeah.
So how big a relief is it? The company's market cap is around 4,000 crores now. They have cash in their books. They have some land as well. So how would you view it? Because now it could be business as usual if, in fact, this retrospective relief comes about.
No, absolutely. I think from what I can make out from Tipsy's update, this is going to be more of a contingent liability getting off the books. Though there was nothing, in terms of the balance sheet really right now carrying that burden. It also starts letting investors think about what is it that the company can do in terms of growth going forward. It's not just about maintaining the business that it has in the current properties, but it's about whether there is any potential to expand, which had suddenly all come to a grinding halt. So I think instead of the whole matter hanging fire and nobody making anything out of it, this kind of paves the way for the business to grow and the government to start looking at some revenue accretion from future businesses as well. So it's positive, but I'm not too sure, Nigel. We've seen this happen a lot of times. We come to this stage and things don't happen. One of the interesting part of the GST Council discussion, if it's on the agenda, and I'm not sure whether it is yet, would be the taxation on getting gas under the GST ambit. And if that were to happen, I think that's going to be a far more impactful change in the long run. So something like that could probably be very interesting, more than just these companies in the gaming side. But let's see, just a couple of days to go, and we'll get to see what's in store for us.
Okay, well, another pocket that has done pretty well today, Prakash, is this entire fertilizer piece, right? So whether it's RCF, NFL, Chambal fertilizers, all sitting at fresh highs, big gains, 8-9%. Is it just a trending move, a trading move, or do you think there's something in it for investors as well?
So I was waiting for you to pose this question. I think it's essentially a combination of 2-3 factors. One is you have the rationalization that's potentially possible, though it's just 5%, which might not be such a big impact, but it's more sentimental. Anything to lower input costs for the farm, for the agriculture sector, is going to be seen as very positive for the government to continue a line of action going into the next 4-5 years, which might be very favorable. And of course, the third thing is the monsoon is round the corner. This is probably the time where you probably start seeing, the consumption peak out. And this time around, given that a lot of our fertilizer units are gas-based, so the input side is fairly benign. It's like what happened to cement last year when coking coal and all of those prices, input prices came down. You'll probably have better margin realization for most of the bigger players, the ones who have scale. So I think it's a lot of things falling in place, and the market's very rightfully excited. This could continue for the next few weeks till the monsoon really kind of sets in.
Okay, all right. We'll do one thing. We'll take a short break on that note. Prakash, do stay on. We still have about half an hour left for the markets to close for the day. It's a mixed day, actually. Although the Bank Nifty is doing pretty well, the Midcap Index is under pressure. So we'll take a break. When we come back, Mithun Aswath from Kiva Advisors will be with us to discuss more on the markets.
Welcome back. A very, very interesting market at hand. And to discuss it, to talk about the way forward, we have with us now Mithun Ashwath of Kiva Advisors. Mithun, thanks very much for joining in. So this big bank trade, this is finally showing up. The question is, is it the real deal? You know, we've had several false starts in the last couple of months. You know, you have banks going up 1 or 2 days and then it kind of fizzles out. But what's your sense? I think the entire market is waiting for the banking sector to take off. Is this it?
Yeah, good afternoon, Surabhi. I think, there's been, post the election results, you've seen, FI has also come back quite strongly. I think over the last 1 week, over $1.5 billion have come into the market. And, this is the pocket where, there's been underperformance, especially in the private sector banks, which we've spoken about. And I think, the rotation is going into pockets where their valuation is comfortable, as well as there's enough liquidity for investors to take positions. So I think this could continue, because if we need the market to move up even further from here, at least at the index level, you need the financials to perform.
Okay, you need the financials to perform, and that's really what's happening right now. But on the other hand, Aswath, you have the Midcap index, which is coming in for some profit taking, and the index is down about 400 points. You think it's getting a bit frothy at the top there? And how does one approach it?
Yeah, afternoon, Sonia. I think, you've seen, the Midcaps really outperform over the last couple of weeks. And, I think it's just maybe a bout of some profit booking, because I think there's continued interest there at lower levels in terms of, select stocks. So I would not kind of give it a broad brush saying, mid-caps, are done with. I think you have to be maybe slightly more selective, but opportunities will continue to be there. So I think the growth rates in those companies are higher than the mainline indices. But obviously, one needs to take into account valuations as well. So.
Okay, all right. Hi, Mithun. Good afternoon and good to see you in. Well, normally you give us one stock, and I believe the one that this time around you're looking at is Nesco. Give us the rationale. Why do you find the stock attractive even at current levels?
Yeah, afternoon, Nigel. Nesco is basically a real estate company which owns assets. They own the Bombay Exhibition Center as well as an IT park in Bombay. The good part of this company has been that they have been expanding using internal accruals. They're sitting with close to 1,500 crores of cash and investments, which they're looking to embark upon a 4.6 million square feet expansion in the existing space. So they are going to put up an IT park, hotel, and also expand the Bombay Exhibition Center. So we actually see maybe a tripling of revenues over the next 5 years, because they currently have about 1.7 million square feet under which is operational, which could there's 4.6 of further space being added. So this is something that is a long-term play. It's going to take maybe 3 to 5 years to play out. But at the current market, trying to find value is something that we've been hunting for. And at about 18 times trailing earnings, this doesn't look too bad.
Okay, that's an interesting one. The hunt for value, and Nesco is at least making the cut. And that's really, I guess you're summing up most fund managers' pain, right, Mithun? Because when you have traditional defense stocks trading at 40 times and capital goods companies now trading at 90 times, 100 times, this whole value searches is difficult. So give us some more ideas, some more pockets where you think that it's still reasonable to get in now.
I think I was just hearing about Nigel talking about fertilizer as well. And we've spoken about this earlier. One of the companies that we spoke about earlier, as well as Mangalore Chemicals and Fertilizer, where valuations are very comfortable. There's an impending merger with Paradeep Phosphates, and the merger ratio is in favor of Mangalore Chemicals shareholders. There's almost a 15 to 20% discount at the current prices. Here as well, I think valuations are on your side, and potentially as a fertilizer policy is also announced, we do think this presents an opportunity for investors.
Sure. Okay, that's on the fertilizer space, coming back after a while. But ahead of the budget, I think there are a lot of these spaces that are coming back into action. But, I wanted your thoughts on the auto sector, because we've had some solid commentary coming from many managements, right? Whether you look at M&M, whether you look at Tata Motors, they've actually come out with a long-term vision of a 15% EBIT margin for Jaguar Land Rover. So they are that confident about the business. Do you think more money can be put to work here?
Yeah, hi Sonia. I think we've held on to Tata Motors for a long time, and we continue to stay put there. I think the local business is already debt free, and they are parking upon Tata Motors JLR also becoming debt free next year. Also, there was some news today where there's the JLR platform is going to be used for EV vehicles in China with their JV partner Chevy. So I think there are good times in Tata Motors. There's also an impending demerger of the commercial vehicle business as well. So I think Tata Motors, obviously, it has moved up quite handsomely over the last year or so. But I think there's still, more for investors with a 2 to 3 year perspective, with the plans that Tata Motors, both on the JLR and the local front, have. I think you should stay put there.
Okay, all right. What about a couple of other ideas? Midun, in the past, you've discussed quite a few. I think we discussed Bharat Forge, Everready Industries as well in the past. What else? That was an interesting point you made on the merger ratio between Mangalore Chemicals as well as Paradeep, that, there is an opportunity of close to 22%, I think 22-23% as of now. Anything else you find interesting?
Yeah, I think, Nigel, we spoke about Vedanta some time back, and it's obviously rallied very handsomely since those 270, 280 levels. But even now, at around 450 levels, interesting fact is now that Hindustan Zinc has rallied quite sharply. And, Vedanta holds about 65% there. And the 65% stake in Hindustan Zinc is more valuable than the entire Vedanta right now in terms of market cap. So, there are some anomalies in the market. I think Vedanta is also talking about, unlocking their, iron ore, their steel business in the next couple of quarters. That, again, should help reduce the debt. So I think that counter still looks quite interesting and could still provide upside for investors.
Mithun, since you made it so interesting, I think it'll be a good idea for us to get the promoter on the channel. Let's hope in this week itself, we'll get Mr. Anil Agarwal to answer some of those queries. But undoubtedly, the stock has been a big play on this entire metal melt-up that we've seen. Good talking to you, Mithun, as always. Thanks a lot for joining in and filling us in with your take on the markets as well as on individual stocks. By the way, just take a look at the markets. It's a big, very, very volatile screen out there. We were trading with a gain of close to around 90 points approximately just a short while back. I think it was less than 20 minutes or so ago. And bang, suddenly you have the Nifty bank actually that's come off 500 points from the high point of the day. The Midcap index is down more than 500 points as we speak. And you have close to 1,500 stocks that are declining for around 900 stocks that are advancing. So the screen has just done a bit of a U-turn actually. 45 minutes or so ago, things were looking much better. But now you have pull up the advanced decline ratio, you'll see that those you have way more stocks that are declining in comparison to the number of stocks that are advancing. For the time being, slip in a short break. You come back, we'll get a Nimesh. He'll tell us what he's picking up in D-Street Chatter. Welcome back. Markets down close to 30 points. It's been a fairly volatile session, but the star of today has been the Nifty Bank. Let's welcome Nimesh, who joins us on the show to tell us what he's picking up in D-Street Chatter. Nimesh, take it away.
And Nigel, a very range-bound day of trade as far as Nifty is concerned, but the focus seems to be clearly shifting towards the Nifty Bank, and that's been the relative underperformer in the last many months, right? And now we are seeing a bit of traction in the private bank stocks, and that's backed by some FI buying as well. But again, the big theme or the overarching theme seems to be the large blocks that will shadow a lot of institutional data in today's market as well. 20,000 crores and counting, that's the kind of block deals we've seen in a single day today. Of course, it's largely led by Vodafone, but even there has been some large blocks in some mid-cap names as well. Mid-cap in general has seen some bit of profit booking as well, and that could be one. And the one reason could be that you're seeing a lot of liquidity getting sucked out in this kind of block deal. So maybe a bit of momentum can break in the broader markets. That's been the fear, and that's why you've seen some bit of profit booking there. And within that, I guess there is a bit of profit booking in the PSU names as well in today's market. But the overall feedback is that the trend of this large block deals is likely to continue. So today's number will look very large because of multiple block deals. But I guess from a pure flow point of view, the flow has shifted largely towards private banks from larger FIs.
Oh, absolutely. Are you also tracking Bharti today, Nimesh?
Yes, so just to add to that point, Sonia, while Vodafone Idea is buzzing in trade, Indus recovered from the day's low. Bharti is actually at day's low. In fact, a couple of days back, I had highlighted that maybe the city is anticipating a large block deal in Bharti very soon. Looks like the speculation is there in the market today that there could be a large block deal which can get launched, and hence that stock is marginally under pressure. For the last couple of instances, Singtel has been a seller in Bharti Airtel via block deal. So need to see if that indeed turns to be true and there is a large block in Bharti Airtel. So that's something to talk about. But in terms of individual names from my list today, the first name is Shelley Engineering. Big move on that stock after a large block. Nearly 5% equity got changed hands. I understand a leading domestic mutual fund was a buyer and an FPI was a seller in today's block. Even after today's block, that FPI continues to hold another 5% stake. So that's the first name. The second stock is Ramkrishna Forging. 2 days, the stock is up 15% and on large volumes as well. Looks like the HNI interest is back on that particular stock. And I understand specifically one particular long-only fund is an active buyer as well in Ramkrishna Forging of late. The third stock is All Cargo Gati. Again, the stock has been buzzing off late, but now I understand there's going to be a QIP launch very soon. Some commitment has come in from larger HNIs, but looks like that QIP book can get launched very soon in All Cargo Gati. And the last name is Centec Reality. It's been a relative underperformer in the real estate name, but now you've seen a bit of traction back. I understand a leading long-only fund is an FI is an active buyer as well, and that's the reason why we've seen big moves and backed by large volumes as well.
Okay, got it. So plenty of action and of course plenty of deals in the market. Got it, Nimesh. Thank you very much for the latest, for all the updates. Okay, so there's a bit of a dip that's coming in. The index, the Nifty, is now down about 0.25%. Let's take a look at where the declines come in. ICICI Bank has cooled off a little bit. So that's a very sharp dip in the last about 15-20 minutes that we're talking about. L&T is also losing some ground. Lever, L&T, the cut is now about 3%. Lever, Britannia, Nestle, Tata Consumer, a lot of these consumer stocks, they're just extending their declines. Many of them are now heading towards the lows of the session. So this is where the weakness has been. The Bank Nifty also, because of the dip on an ICICI Bank. Let's pull up HDFC Bank as well. So a little bit of a cool off from the top. And the Midcap Index obviously is nursing a decline of a whole 1%. So extremely skewed market, very, very different trends coming through. Good time to bring in Mitesh Thakkar. Mitesh, so, what is the sum and substance of this? You've got the bank engine firing, but then the rest of the market is completely fizzled out, really. So what's your final advice, take, and, of course, trades?
Yeah. My understanding is that, basically it's just some sort of profit booking as the bank Nifty has cooled off a bit and the Nifty was anyways not performing today. But as I said, I think if there's a pullback which happens on the index, it could be to about 23,380 zones. As long as that doesn't get taken out, stay long, maintain your long positions.
Okay, and what about individual stocks? What are we looking at?
So I have one STBT, which is Berger Paints. I think the side counters are slightly on the weaker side. So sell here with a stop at about, or a stop at about 502 for a STBT trade for a target of around 490. While Q4 is something which can be taken as a BTST kind of a trade. Keep a stop below 53.75 and a target of 54.50 can be looked at.
Okay, all right. Thanks for that, Mitesh. Well, it is a mixed day for the market, no two ways about that. So we're going to go home with losses of around 60 odd points on the Nifty. There was profit booking, and but the Bank Nifty will go home with gains of around 900 odd points. Mayuresh Joshi is joining in. He is the head of research at William O'Neill. Mayuresh, thanks a lot for being with us. I wanted your thoughts on banks, because finally some of these laggards like HDFC Bank are coming back into action. Is it a good time to be buying any of these names, and what would your top picks be here?
Afternoon, Sonia. No, I think we remain constructive on banks and financials as a space at MarketSpace India. So two things happening here. One, obviously, in terms of expectations of loan growth or advances growth is going to continue at a very good clip. Obviously, a lot of these larger banks had their inherent issues as far as deposit mobilization was concerned. But I think it has been a steady state performance in the quarter gone by. And the expectation is that the deposit growth should normalize in the next few quarters as well. So when you talk about the other parameters in terms of cost to income, what the RBI circular has probably done in terms of the unsecured book, the personal lending book, so on and so forth, the provisioning has increased quite significantly. The risk-weighted assets, along with expectations of asset quality pressures, still remaining benign. I think those are positives that one can really work out for. So I think we really like the space as a whole. I think within the large cap names, ICICI Bank, Axis Bank, IndusInd Bank remain on our watch list. Within the PSU universe, State Bank of India, the leadership PSU stock, which has very decent EPS RS ratings as we see it in markets with India, looks reasonable as well. And within the medium-sized banks or the mid-sized banks, Karur Vysya Bank is something that we continue like based on a whole host of parameters that we just discussed.
Okay, all right. Hi, Mayuresh. Good afternoon and good to see you in. What about Voltas? You know, at one point of time, it was losing market share and margins were eroding. Then from those levels of around 750, 800 rupees, in the last 12 months or so itself, the stock close to have doubled. Today, it's down close to 4%. Things are cooling off a little bit, which I'm not complaining about. But how do you approach the stock at around 1,400 rupees?
Afternoon, Nigel. Yes, I think a solid move. In fact, all these consumer white good companies have done well. So Voltas, Blue Star was one of my top picks, our top picks at William O'Neill. We've discussed it quite a lot of times on your shows as well. But I think the entire aspect in terms of how earnings will play out, specifically looking at the heat wave, I think the volume growth probably did not translate in Q4 numbers. Maybe in Q1 numbers, that might just come through. And the other element of their businesses, both Blue Star, Voltas, the EPC part of their business and the electromechanical part of their business as well. The order books are looking quite reasonable enough. The working capital cycle is coming back to normal. You did see some element of spike as far as input costs were concerned, but they mitigated that to a large extent. And to that extent, I think Q1 numbers should be relatively better for these players. I think within the pack, I think Voltas has maintained its market share as far as room air conditioners are concerned. They are sounding a little bit optimistic as far as their Middle Eastern order book and the execution of their EPC book is concerned as well. And so is the Blue Star management. So I think these players might report a better set of Q1 numbers. But Blue Star is something that we continue holding on to our global performance.
Okay, all right. So Blue Star would be something that you like. By the way, yeah, just checking the market, still the same story, about 1% lower on the Midcap index. That's been the sort of trend that we've had. Mayuresh, today's profit taking is actually leading to a little bit of a cool off, even on some of these high-profile PSU names, PSUs, defense, shipbuilders, etc. Would you be a buyer in any of these dips? If at all you are looking to buy a PSU stock on a dip, which one would it be? And please don't say SBI. I'm putting a caveat there. You can't say SBI.
So you just took my answer away, Surabhi. But yes, I think the defense stocks are overheated at this juncture, way above pivot levels as we see it. Is there good enough of tailwinds for the sector as a whole? Absolutely, yes. I think look at the huge order HAL got. Mazgaon, Cochin, the shipbuilders are sitting on revenue visibility for the next 5 to 6 years. They've been executing well. So the numbers have also held up. The only worry that the street Surabhi has is whether 1 or 2 quarters, the execution probably does not go as the way the street likes it. And therefore, I think the kind of base that they've now created, they have to keep on outperforming in terms of superior earnings performance every passing year. So I think 1 quarter of bad execution might actually derail the stocks to a large extent. So I think we are a little bit wary at this juncture because of the late stage basis that they've created. But we are a little bit selective in the broader markets as well. Since you mentioned infra as a theme or PSU as a theme, our take is that within the lower run PSU banks, Bank of Maharashtra as an example is something that we continue holding on to our global portfolios. Our take is that the bank has performed reasonably well as far as balance sheet is concerned. The expectations in terms of management commentary, specifically when it comes to asset recovery in general, looks very, very optimistic. The deposit mobilization has remained strong. And therefore, if you look at the cost to income ratios, which are trending lower, the expectations of provisioning, which is significantly higher, gives a good enough cushion in terms of as recovery of assets starts happening, profitability might also start improving along with the other dynamics that we're probably looking at. So yeah, picking and choosing outside SBI, I think Bank of Maharashtra is something that we continue to do.
Okay, thanks for that. Well, let's do one thing. Let's take a quick break. We have about 10 minutes left for the markets to close. Let's listen to excerpts from our conversation with Manish Sonthalia of MK Investment Managers. We'll come back.
Overall, I think the direction remains positive. Only thing to watch out for is that for the next 6 months point of view on a fundamental valuation basis, the Nifty 50 looks to traject another 5 to 6% or 5 to 7% at this for the next 6 months. So the main action is going to be in certain sectors, the broader markets as a whole. I'm not talking about the extreme small caps or the micro caps, but yeah, the mid caps and the largest mid caps or relatively, decent market cap mid caps are the areas where the action was likely to be. I think direction remains positive. Overall, I would say that in terms of the IT space, we would reckon that the second half of this year or the first half of next year, clearly there should be some sort of pickup in the IT space in India. Plus now they're actually, converting a lot of their operational creditors dues into equity. So I think, tariff hikes clearly is the need of the hour. We have had it too good for too long. It's around the corner and all the three players must, act in sync. But anything like 10 times EV to EBITDA on FY26 numbers, you'll have some reasonable upside even from these levels. Of course, in the budget, the thing to watch out for would be how much of the money is left in the hands of the average households. So consumer durables, and consumption and consumer discretionary side of things, whether it be your two-wheelers or whether it be your health, pharma, and all of these things will see some sort of, extra attention than what these sectors have got so far.
Welcome back. Well, Indian Metal and Ferroalloys, IMFA, the stock comes up for you on the screen because that long-awaited 221 crores that's been received, that's in compensation of the Utkal coal block. And now the street will be waiting by, because what the management has maintained is whatever compensation they get, most of it will be returned to the shareholders. So that explains why that stock from the low point of the day has seen a big spike up. The total compensation due was roughly around 370 crores odd. They had received close to around 120, 130 crores earlier. And now this is the remaining amount of around 221 crores odd. It was anticipated that it will come towards the end of March. It didn't happen, but now, in fact, in the month of June itself, it's come about. And Mr. Panda, when he joined us on the channel, said that in this quarter, he's quite optimistic that they'll receive the money. Explains why the stock is up. In fact, the ferrochrome prices are strong. This compensation has come in, and they have an expansion of close to around 40% of their capacities. That's why the stock is holding well.
Okay, that is IMFA, Indian Metal and Ferro Alloys, moving higher, 5% up right now. Well, remember, we were talking about this big bank move and how yesterday in a conversation, Gautam Shah of Goldilocks told us that banks really is going to be the trade for the next 2-3 months. He's expecting higher levels on the bank nifty and individual bank stocks as well. Check out that view.
I think banks is really one place to be in because the risk reward is excellent. And my fundamental analyst tells me that from a valuation perspective, banks are still quite cheap. So yes, banks could be one of the trade of the next 3 to 6 months. Risk reward is excellent. Valuations are good. And the money is flowing in because people are coming out of a phase of underperformance.
Okay, so that was a view on technical charts seem to be supportive of a big banking rally ahead. Mayuresh, so you told us about Bank of Maharashtra. Let me now move to the other side, the big blue chip banking part of it. Do you also think that we could be in for some pretty hefty gains? And if you were to buy a blue chip bank stock, which would it be? What's the preference?
So, Surabhi, as I mentioned, on the watch list is a bank like ICICI Bank and IndusInd Bank. I think IndusInd Bank has performed really well so far. What they had set out targets on an annualized basis, they are close to achieving that, both in terms of the retail portfolio touching almost 50-55%. Expectations in terms of their loan growth remaining extremely steady. The NIMs have remained extremely steady as well, and so have the asset quality. So is the asset quality angle as well. So to that extent, I think IndusInd Bank, even from a valuation perspective, plus the expectations of an strong earnings recovery perspective, looks extremely well placed. And ICICI Bank does remain on our radar as well. I think most of the parameters, including expectations that the management probably has as far as their overall book is concerned, and expectations in terms of recovery in NIMs. At some point of time, the rate cut cycle will start at the end of this calendar year, hopefully. And as that starts taking place, the normalization of NIMs should act upon bank balance sheets as a very, very positive, leading to incremental improvement in ROAs and ROEs. So I think ICICI Bank, IndusInd Bank within the large names remain on the watch list.
Okay, before we end for the day, by the way, the market is going to close flat, but don't be fooled by the flat move because there's a lot of volatility intraday and we'll close with losses of around 40 odd points. Today, give and take was a day of consolidation, but as you can see, all those jagged edges on the screen both ways. So there was plenty of volatility, but the star of the show is the Bank Nifty going home with over 1,000-point gain today. But Mayuresh, just a final question from my end. The biggest underperformer this year has been IT. In fact, I was going through the list of top losers. LTI Mindtree tops that list. This year it's down 20%, followed by something like an Infosys down about 3 to 5%. Do you think at any point this year IT would come back in a big way?
So, Sonia, our take is that the second half should see some element of recovery signs coming in for the sector as a whole. And within the space, Midcap IT has done relatively better in terms of both order wins, expectations in terms of no damage as far as pricing is concerned. Management commentaries to a large extent have remained very, very sanguine in terms of dollar and constant currency revenue growth. And therefore, the additional cost that probably happened on the balance sheet in terms of both salary hikes, outsourcing costs going higher, they have probably now stabilized. Large cap IT, maybe a quarter or two in terms of more stabilization expected to take place. BFSI, retail, manufacturing, the three biggest verticals, and North America and Europe in terms of geographies, expected to come back slowly in the next quarter or two. And therefore, an earnings recovery, specifically in terms of large cap IT earnings, should happen in the second half of this financial year as well. Obviously, that coincides in terms of Christmas furloughs and discretionary decision-making processes as well. But our take is that post Q2, numbers should start stacking up in a relatively better fashion. Infosys, HCL Tech should be kept on your radar.
Mayuresh, what is your view on Sun TV? You know, that stock was absolutely did nothing actually for a few years. And now in the last couple of months, it's come back to the 52-week high. Suddenly the street is talking about that cash in their books, valuations favorable. There's a political tailwind as well because the DMK did fairly well or very well in Tamil Nadu. And, you know, there's an IPL franchise as well. From the day's low, the stock has recovered 3%. What's your view at 770?
Oh, yes, actually, I think all these factors are playing out. And I remember, I think you had coined the term, I don't remember, political stocks, something like that, right? So I think all those elements also playing out.
Fundalytics, fundamental and politics together. Yeah.
Exactly. So I think a lot of these aspects are now getting played out. Obviously, I think they do need to regain their market share in terms of languages outside Tamil. What happens on the OTT platform and their investments that they've probably done? How are they going to recoup at the EBITDA level is something to be seen. And even on the film exhibition business, they've been very, very selective over the last few quarters. So what is the kind of expectations that they're laying out on this front is something to be watched out for. So yeah, I think there are a lot of factors at play, which you have pointed out, which is acting positively. But I think we remain a little bit more selective. I think out of mid-cap stocks, I think infra still remains to be a consensus sector. One story that we like is Pennar Industries out of the mid-cap space itself. Our take is that the pre-engineered business in the US, the order book in India, the execution that they're expected to do, and management commentary surrounding the future outlook seems very, very optimistic. So I think anybody holding on Sun can ride the momentum. Pennar Industries is something that we like out of the mid-cap space.
Today, we were talking about the bank seeing a big move. Axis Bank is actually going home at a fresh high. So that's the one large cap which has is now starting to make its presence felt. It hasn't done much this year, actually. It's up about 10% this year. But today, the stock is at a fresh high, Axis Bank. And there was large delivery-based buying as well last few days. Federal Bank is also at a fresh 52-week high. So keep an eye out on that. But I think we can just wind down for the day because it has been a very volatile day for the market. A mixed day, you'd have to say. The Nifty going home with losses of around 50-odd points. The mid-caps going home with losses of 550 points. And it was very volatile through the trading session. But the star of the show undoubtedly has been the banking stocks. The Nifty Bank today hit an all-time high, goes home with gains of almost 1,000 points. It's now approaching that 52,000 milestone, actually closes just above 51,400. And the big moves really came in the banking names today. So whether it was HDFC Bank, which is topping the charts, Axis Bank, ICICI Bank, IndusInd, Kotak Mahindra Bank, as Nimesh was also telling us, large institutional buying in a lot of these private sector banking names. SBI as well was not too far behind. On the gainers list, you also had IT. So it would be interesting to see if IT comes back as well along with banks. Infosys, Wipro, Tech Mahindra, HCL Tech all ending in the green today. On the downside though, you had Titan, Maruti Suzuki, Bharti Airtel, L&T. L&T has also been a big laggard this month. It's down about 2%. Bajaj Auto, BPCL, Coal India, Hindalco down about 2% and Divi's Labs as well down about 2%. So all in all, you'd have to say, guys, the Nifty was just consolidating by the end of it around the 23,500 mark, but you can't take your eyes off the banking names.
Oh, absolutely. Best performing side of the market. And one of the worst performing sides of the market today has been actually the CPSE index, which has lost close to 2%. And that's where a lot of profit taking was quite evident. So you got names like BHEL, BEL, REC, GAIL, SAIL, Aircon. You get the drift, basically. It's a lot of PSU stocks, also PSU defense names, because they've been the poster boys, boys and girls. They've been the high flyers, really. So today, on the likes of Garden Reach or a Mazgaon, Hindustan Aeronautics, a lot of these stocks were coming off as well. Having said that, I mean, there'll always be some gainers. Let me actually talk about some of the ones that were moving up on news. Sansera Engineering, where the block trade actually happened, about 5% up over there. Delta Corp, because of all the potential, GST overhang, going away. That stock was up about 12%. But yeah, I mean, day off for mid-cap cool-off after a long time.
Well, that's right, Surbhi. Well, but it was otherwise a good session if you had banks in your portfolio. But otherwise, a couple of large Nifty stocks, well, they ended deeply in the red. High pedigree names. Titan was down for the second day running. Maruti Suzuki as well was under pressure. And Bharti Airtel as well was down close to around 2.5%. So the mid-cap side of things was underperforming today, while we had the banks that were the big outperformers. Well, on that note, we'll wrap up on this edition of Closing Bell. But Markets Forward comes up next.